Hi, and welcome to the Market Alert for Monday, the 24th of November 2014. Just before we get started, just to let you know that this week is going to be an interesting week because on Wednesday we are going to see the Dow trade for only half a day. Thursday the market will be closed in observance of the Thanksgiving celebrations in the US. And on Friday, the market will only trade a half day as well. So really, we've only got today and tomorrow. And I would expect the market then to go quiet from Wednesday and the same on Friday as well. So just to give you a pre-warning there that we could see quite a quiet week this week with the Dow because of the Thanksgiving celebrations. And in fact, those of you that are new to trading the Dow, you actually get more activity in the Dow volatility-wise during Christmas than you will Thanksgiving. It is the quietest week generally, and I say that generally because obviously the markets are not the same as they used to be, but during the last 20-odd years that has been the case. Now, I go away for one day, and as soon as I look at the news on Friday morning, that's only the business news, I discover that the Chinese government have dropped their interest rates to try and stimulate their economy. So they're now doing the same as everybody in the West. The lunacy has spread. Of course, this is good news for the Dow, and we see the Dow moving up sharply on the overnight. They're making new all-time highs and then continuing to do so all the way through until the opening of the trading session on Friday. So we've got this move on the pre-market session there of 127 points, and then again, because it is sheer lunacy, the market seems to accept that this could be the case, and also that there's a great way of wrong-footing a lot of traders and sucking them into the market to actually go to the long side, not having looked at the pre-market session there of a rise of 130 points beforehand, and then taking profits off those traders who are positioned. And there you see the market returning back to the same place that it actually took off to. I'm just going to just squeeze the bars up there. You can see the market doing an inverted V, basically, market up and back down to where it started. So having factored this in, realizing it's bad news, and again, I could say also using this as a way of taking the money off those that are not savvy in how the professional money operate in the market. So we had a sell signal appear in the charts on Friday afternoon there, and we'll just mark this up, and then we see the market trading down to the scalp level there at the psychological level of 17,850 as well. The market eventually worked its way through, and as you have held the position, you can see exactly how the market unfolded there, trading down to each psychological level until the market got back to where it started prior to the economic news. If we have a look at the daily charts, an interesting picture here as well. This type of price bar here is consistent with the market top. Generally, you need some sort of news item to suck everybody in to finish off the up move. The volume could have done with being higher, but what's interesting is the market's come off the high, and you can see the market struggling there. Plus, we've got, say, the Thanksgiving celebrations this week, so I'd expect the market to be sideways to lower, and the all-time high that's being put into place on Friday to remain intact this week. Let me just squeeze these bars down a bit so we can see the actual price there. So there we've got a new high of 17,892. The 18,000 is still possibly on the cards. It depends what economic news we get for today and tomorrow. And again, depends how many traders are at the posts in order to move the market higher. News front today, nothing for the US, but there is some tomorrow. So let's just have a quick look at this in the Forex factory so we can see what's likely to happen tomorrow. We've got the CB consumer confidence at 3 p.m. when the Dow's open. That's a high impact news item. And there you can see 95.9, 94.4 before. Wednesday, the market fairly quiet, half-day trading, but You can see there that the economic news is still being released for the US at 1:30 and home sales at 3 p.m. and then the market will close early on around 5-ish for the Dow on Wednesday. Thursday it will be closed. Friday we've got no US economic news being released there. So you can see it's a bit of a patchy week as far as that's concerned as well. On the implied volatility front, fantastic news here. The market down to 9.28. But what's really impressive is the precipitous fall there of the historical volatility. They're dropping down to 11. The low is 5.65 on the 3rd of July for the historic, 7.9 for the implied volatility. So we're heading back down into those sort of lows before we had this other correction. But I'm not expecting the market to put in another big correction just yet because we've got the run up to Christmas. We have Black Friday coming this Friday, which is the start of the consumer buying up till Christmas as well, and that tends to give the market a bit of a lift as well on the basis that the retail sales figures are going to be healthy come the beginning of the new year. So there's plenty of room for this market to move to the downside here as well. And the blue line, of course, the historic volatility needs to go below the implied volatility. It's preferable for a correction in the market there. So sideways for the market, it would be my guess this week, unless, of course, the Chinese come out with another statement or something along those lines by any other country or the Eurozone reducing interest rates to pump the market back up to the insane levels. And speaking of insanity, I just thought I'd show you this as well. This is a chart of the Dow. The Dow is in green. And you can see there we've had this massive move since 2011. And the other lines are the GDP figures, gross domestic product figures for 2012, 13 and 14. So you can see this inverse relationship to the stock market. There is no fundamentals backing this market. And you can see there from QE3, which is the 85 billion a month printing by the US. You can see the effect this has had in the market. So it's only the Fed's money that's being pumped into the markets that's moving prices higher. It is not growth as far as world GDP is concerned. You can see that is in a downtrend and has now become sideways there. And these figures are statistical sleight of hand without a doubt, especially as far as the UK GDP figures are concerned. They now include forecast on pensions that have not been paid out, prostitution and cocaine consumption as well. And if you don't believe me, have a search for it on Google and you will find that it is in fact the case. So here we can see these prices here are basically levitating in the highs, and the great thing is with using the implied volatility you get a great indication of when the next correction is coming because of the implied trading back to these historic lows, and then the historical volatility also trading back below that as well, which gives you the trigger point for the next correction in this market. You can go back and look at all of these points where the market's corrected, and you will find that the precursor was the lows in the implied volatility or the VIX index as well. Right, well, that's it from me this morning. I will see you in tomorrow's edition of the Market Alert. Let's see what happens today. Hopefully a decent day today and tomorrow before we go into the half day, and then closed on Thursday and half day on Friday. As ever, thanks for your support. Very much appreciated. And as ever, thanks for watching. I will see you in the next one.